Get straight to it. Zeta is down almost another 8% today. They're down about 39% the last 1 month. They're about down 28% over the year to date and almost down 27% over the last year. Now, this is absolutely wild because the beginning of this year, obviously, we took off like a rocket ship from 1991 all the way up to a high of $24.40. I've been buying throughout all of this. I've been buying since essentially 14, all the way up to 24, all the way down to $14.74. And you probably think, wow, this guy's an idiot. He should have sold. He should have took profits. He should have done this. He should have done that. But you have to understand that I'm a long-term investor when it comes to Zeta. Do I like that it's down so much? No. But is it a great opportunity? Is it a better opportunity than when it was up at 20? Yes, it's very, very fundamentally undervalued. And I'll walk you through in this video why it is so undervalued sitting here at $14.72. I'll walk you through the levels that I'm looking at. And first, at the front of this video, we're going to talk about why Zeta is down so much so far this year. So we got a lot to unpack here, guys. Let's get straight into it. First and foremost, why is Zeta down so much this year? Well, we're going to look at the Zeta fundamentals, but you first have to understand that I'll just tell you straight up front, it's not Zeta's fundamentals. It's not anything they've done. It's literally the market in this sector. The market and the sector that they're in, which is SaaS, subscription as a service, is down huge. Technology services, packaged software, it's down huge. We can come on over here to ValueSnapShot.io and we can come down here to Discover. We can look at market briefs. And what market briefs will tell us is that we can get a nice ranking and a nice snapshot of what the markets are doing. Well, right now for the year, materials, industrials, energy, semis, robotics, these are all up. Where we're really seeing pain in this market is AI and machine learning, software and cloud, big tech, EVs, drones in space, cybersecurity, financials, quantum computing. A lot of stuff having to deal with AI. And right now, everybody believes that AI is going to just completely disrupt software and cloud, subscriptions as a service like Adobe, Zeta, Salesforce. They also now believe that it's going to disrupt health insurance companies, regular insurance companies, fintech companies. They just think AI is going to disrupt everything right now. And that's why you're seeing the markets down almost 2% today across the board in the Qs, the NASDAQ, the SP 500, and the IWM, the small caps. So when you're really looking at this, you have to understand that Zeta is in a sector right now that is getting brutalized down 21% for this year. And the whole thought process is that ever since Claude released Clawbot, that everybody just thinks that AI is going to absolutely destroy all of these companies. Fortinet, all of these, let's say, cybersecurity companies, Adobe, Palantir, even though Palantir is a huge winner, but they're just extended. Snowflake, Oracle, Microsoft, MongoDB, PanW, Intuit. They just think that these are going to get vastly disrupted. And Workday now, ServiceNow, Intuit, Hubs, Team, Crowd, Datadog, they just think that all these stocks, including Zeta, are going to just cease to exist because of AI. And I'm here to tell you that Zeta, and I've said this multiple times now, Zeta is not going to be disrupted. They are the disruptor, okay? They are the disruptor. And I will walk you through kind of my framework for this, and then we'll get into the levels and kind of check those things out. But how I look at any stock is I run through my opportunity matrix. My opportunity matrix is essentially discover, find the play, data, check the math, and then direction, time the entry, okay? Now, That last part, the direction, we did get in when the direction was good, but sometimes the direction can do a U-ey and completely go against you. And when those times happen, if your conviction's still there, you don't just sell out of the stock and say, "Oh, I'll try again next time." No. If your conviction's there and the fundamentals are still good and the stock's selling off because of things outside the stock and company's hands, right? They're doing everything right, but the sector and what's going on right now, they can't control the narrative. So, yeah, we'll talk about that in a little bit because I know that I've been posting about Zeta having this bullish looking chart for a while now. Well, that all got invalidated, and the news is going to drive the market sometimes, and the news and the narrative right now is SaaS bad, AI going to kill. That's just the narrative right now, and there's nothing we could do about that. All we can do is just continue to buy into companies that we have high conviction in and know the levels where we want to add more. That's it. And then play the waiting game, because I'll show you in here, we can pull up Zeta's fundamentals, right? Let's pull up Zeta's fundamentals here. Let's pull them up, and I'll quickly show you that this isn't a Zeta problem, okay? How do I know it's not a Zeta problem? Well, if we go to if we take off gross margins, we look at the profit margins for this company. We see a company since 2023, this is quarter over quarter. So every quarter, they are growing here. Free cash flow margins, 7.5%, all the way to 15.6% free cash flow margins. So this is basically how much free cash flow do they bring in based on their revenue. Then you have stuff like operating margin and net margins going from negative 25%, negative 30%, all the way up to 4.5 and negative 1.1%. Actually demolishing everything. And you could see year over year, they were at negative 2.9, negative 6.5. They flipped that to 4.5 and negative 1.1. So they completely flipped that. And guess what? Q4 2024 was profitable. Net margin, free cash flow was big, and operating margin was big. Guess what? We're about to report Q4 earnings here in just under 2 weeks. So I'm expecting something like this, dupe, like up, right? That's what I'm expecting. I'm expecting a profitable quarter. A lot of my friends that are invested in this company and talk about this company on social media a lot as well are expecting profitable quarters. And that's with some write-offs and some one-time expenses around their Marigold acquisition. So you have a company where their profit margins are going up and to the right, and they're about to flip to profitability. You have you have revenue and net income going up and to the right, about to flip to net income positive, right? About to flip to net income positive on a quarterly basis and roll that into a yearly basis. Revenues are going up and to the right. They also just partner with OpenAI. Like they have like 40-some% of the largest companies in the United States using their product. They're a marketing tech company, if you didn't know already, that uses AI. They have this new product, Athena, that's going to be huge. Like all of their charts, all of their fundamentals, free cash flow, revenue, net income, it's all up and to the right. So there's no stagnation. There's no issues with their margins. They're expanding customers. They're expanding large customers. Over $1 million per customer is expanding. For every $1 spent, they're returning $6. $6 for every $1 spent to any of their customers, any of their business customers. So as we can see here, are they being disrupted by AI? No. Are there signs they're being disrupted by AI? No. Could they be disrupted by AI? They could, but what AI doesn't have is they don't have what Zeta has. And what Zeta has is first-party data. When they bought out Live Intent, which I compare to them, when they bought out Live Intent, I compare it to Facebook buying Instagram. When they bought out Live Intent, they essentially got all of this data from live intent, from every time someone read an article and accepted cookies here, there, everywhere, right? And so they had this large pool of data that they essentially can always reach into without matching you exactly, but you get this little ID. And with that ID, they are able to match it with your, your virtual ID online. And so they're able to use that to their advantage to match you to the proper products and put the right ads in front of you. And that's where for every $1 spent by a company, they are returning $6. And they want to increase that to, for every $1 spent, they want to give back their customer $10, right? In return on investment. So financials are there. There's no issues. They are the disruptor, not being disrupted. If we go to our value analyzer before we get into the charts here, if we go into the value analyzer, we go down here to Zeta. We can look at a DCF model, which goes off free cash flow. We can look at an EPS model, which goes off earnings per share and does PE. We can do a rule of 40. We can do a PEG ratio. We can just look at all of these real quick. But one thing I want to point your attention to, this isn't just me saying this. This isn't just some random guy you're watching on the TV or your phone right now saying, hey, Zeta's really undervalued. It's a great deal right now. This is also analysts. The current price is $14.74, which I believe it's, $14.75 right now. Analysts have a low. Their lowest target is $25, 70% higher from where we are right now. Their consensus of analysts is $29. Again, we're sitting at $14.74, 96% higher than where we are right now. And the high of analysts is $36, 144% higher than we are right now. And I'll show you how I run my projections. And running your projections with ValueSnapShot.io lets you know and understand where I should be buying this company to give myself a good margin of safety and to make sure I'm not overpaying for any stock that I want to own. Okay? Very important there. So let's look at this model that I already did. And it's really nice because you can just look up your valuation history. For the next 3 years, with this trailing 12-month revenue, growing 25% revenues per year. Now, mind you, this year, they're expected and forecasted 35% revenue growth, which they consistently beat their revenue. Whatever they project, they consistently beat it. So I expect them to beat 35% revenue growth. But 35% revenue growth this year, they've consistently grown at least 20%. So being conservative, saying 25% revenue growth is being very, very conservative, guys. You just saw that they were doing 15.6% as of their last quarter. On a trailing 12-month basis, they're doing 12.7%. So for the next 3 years, on average, we'll just go with a conservative 13%. And then they're currently doing a price to free cash flow of 23%, even after this massive down move that we've had, right? I believe if you're growing over 25% revenue growth, you should get a 25 terminal value or higher. But let's beat them up. Let's go with 20. And we quickly see that the intrinsic value here is $22.37. When we beat this thing up, they should be trading at $20.37 today. Today, not yesterday, not tomorrow. Today is when they should be trading at this based on these conservative assumptions. Okay? And again, consensus right at 29. So if I actually put in what I believe, let's say the next 5 years, they grow 25% per year, which I think they will do. Let's just actually say they only grow 20% per year is what they've been doing, but again, expected to grow 35% this year. Margins will get up to, I believe, 15% over that 5 years. And then because they're growing 20% plus per year, they should command a 25 terminal value. That puts them at a 30, based on these assumptions. If you believe these assumptions, which I believe are still conservative, they should be trading at $35 today, not $14.75. Is 138% upside, and this puts us towards the high of where analysts are at. And again, we are at $14.74, ladies and gentlemen. Real quick, tax season is upon us, and if you're like me, you probably hate the paperwork and headache of dealing with them. I personally use Blake. at South Oak Accounting and would recommend him to any of my friends. I actually have already recommended him to a bunch of my friends. So they actually do anything from taxes, to bookkeeping, to tax planning, to business applications. He personally handled all my business applications. Yeah, they do it all. Blake and his team are phenomenal. And if you're looking for a tax professional that can get the job done this year, look no further than South Oak Accounting. And Blake, here's their phone number and here's their email. I would highly recommend them to anybody. Analysts are saying it. I'm saying it. This company's undervalued. But guess what? Just because a company's undervalued doesn't always mean that you're going to get rewarded right away. Sometimes you have to wait. Did we forget that Palantir, not because of Palantir, but because of the markets, Palantir went from, where is it at? Oh my goodness. Went from $35. I want to see this better. Can we zoom in on this? Let's see. Let's just do all time. Went from $35 in 2021. $35. They dropped all the way down to like $5, $6. Look at this. $35 after IPOing, they went straight up. Then they dropped all the way down to like $5 to $8 range. And then they finally broke out of that and then went up and away on this massive rally from $5 to $8 all the way up to $200, guys. Have we forgotten? Could this happen to Zeta? It most definitely can. Down here, Palantir was stupid cheap. They were just flipping to profitability. Their free cash flow was monstrous based on what they were doing. And they were disrupting other companies with their AI and AIP. And that is what Zeta is doing right now. Flipping to profitability. Their free cash flow is massive. And they're disrupting other companies, especially in the marketing sector, with their Athena product. That's brand new. And they're already disrupting other companies, other products with just their marketing tech platform and their first party data. So guys, like all we can do is as long-term investors, we can't control the markets. We can't control how things happen in the markets. All we can control as long-term investors is finding great companies in great sectors doing great things. Using the opportunity matrix, we can do this by discovering a stock, looking at the data, running the financials, looking at the charts, seeing that margins are climbing, the net income's climbing, revenue's climbing, then running valuations based on projections and seeing that based on cash flow, EPS are about to flip to profitability, Rule of 40 and PEG ratio, that they are severely undervalued, guys. Severely undervalued. Revenue growth this year going to be 35%, and their profit margin is around 15% based on free cash flow. Now, they don't have profit margin on EPS yet, but I would expect it to be somewhere in the 6 to 10% range. So you're still getting a Rule of 40 of 41, and then a PEG ratio. EPS growth rate is going to be very, very big. Current PE is 20. You're looking at another undervalued on PEG ratio as well. And then if I ran the EPS numbers and didn't actually show, negative EPS, then we could see that as well. And you just see here that based on DCF, Rule of 40, and PEG ratio, we get a strong buy with an average upside of 138%. So all we can do is find these companies, and guess what? It doesn't mean it's going to go right up. We might buy the top. We might buy the bottom. We might buy in between. You dollar cost average into high conviction companies. I have a ton of leaps for 2028. I have time on my side. I don't believe what we're going through in the markets right now is going to be some sort of bear market or anything that really drags on too long. I think it'll be like a few months, and then we'll see a V-shaped recovery. That's what I believe. I don't know that for sure, obviously, but that's what I believe. So we've discovered Zeta. We've looked at the data on Zeta. We can compare it to, but we won't do that for this video. I want to keep it a little bit shorter. We can look at the technicals on Zeta, and we can see that we have a golden cross on higher time frames. The overall is bearish. We are under the 20 daily moving average, we're under the 50, and we're under the 200-day moving average. We're also at 28.9 RSI, so we are very oversold at this time. And finally, like I told you, we would look at the levels that I'm looking at for Zeta right now. When are we going to stop falling? When is Zeta going to stop being a falling knife? Well, when I was originally looking at this, you guys all know that I was talking about this cup and handle. We had broken out of this cup and handle and we were on our way to $30.54. Well, that was before all this SaaS-geddon, as I'm calling it. Just like this was tariff-geddon, or some of it was tariff-geddon, some of it was other factors like the lawsuit and stuff like that, the short report. But we were good. And then we did a full U-turn. And now we've been falling like crazy because, again, people think Zeta is going to be disrupted and be replaced by Clawbot, and then they can do what Zeta does. It's just people not understanding what Zeta does at a high level or at any kind of level at all. And it is what it is, guys. I mean, we can't control how other people look at this. We can't control that people don't understand what they hold. We can't control that, Wall Street really hasn't caught on to this company yet. Dan Ives has. Dan Ives sits on the board for, basically giving advice to Zeta. So he understands it. But anyways, here's your levels, guys. We have a strong level right here around $14, about $13.56 to $14 range. This is your 200 week moving average. Is exactly where we dropped last time during tariff-geddon before we bounced hard. This is where we're at right now. So 13.56, and then you can also see there's support resistance in here, some support resistance in here, and then going all the way back to 2022. This was their previous high. So you have some resistance support line here. So right around $13.50-ish is a very, very strong support. If it was to break through that, we would have to go next to $11.14. Now, don't say this can never happen because anything can happen. You have resistance here, support here, resistance, support, after resistance, support. So this would be another support resistance line right at $11.14. And honestly, Armageddon, this is if the markets really do crash like 20% plus, we could see all the way down to around $8 per share. I know that's crazy. We have all this nice support and resistance in here, all of this price action in here. So this is where I believe that like that Armageddon, like holy crap, this is not good. This is where I believe we could go down to $8. Again, this is, I believe, if the market crashes 20%. Okay? So not trying to scare you. If you're in this company long term, that's all that matters. If you have conviction in this company, you understand this company and believe in this company long term, like I do, you're sitting here buying more leaps or you're buying more shares for the long term. Look, some people are getting on me in my comments saying, oh my gosh, Ronnie, like I can't believe this, blah, blah, blah. Like you were pumping this stock, you were talking about this stock. Guys, I've been very bullish and very open about that from down in here in June, all the way up here, down in here, up in here, down in here. Guys, it doesn't matter where this price goes. And here, I'm bullish here, I'm bullish here, I'm bullish here. I can't help that how bullish I am on the company. I've interviewed the CEO. I've met the CEO, David Steinberg. I understand the company at such a high level. I can't help that I'm very bullish on the company. I also can't help what the stock market overall does. The margins are going up. The revenue's going up. The net income's about to flip to profitable. They're disrupting with their AI products. They're disrupting with Athena. They're giving back massive return on investment to their customers. I understand all that. I can't control that that Claude puts out this Claude bot and everybody now thinks that SaaS and subscription as a service and tech services and packaged software are all going to die now because of that. I can't control that. I can't control that the markets are pretty extended still and they look like they want to correct. All while this whole SaaS-geddon thing's happening and AI is going to kill finances and fintech and AI or in SaaS and all this other stuff. I can't control that, guys. I'm sorry. But if you want to understand where companies should be valued, if you want to understand how to be buying here and here and here, when the price action says you shouldn't be buying, but the fundamentals and the long-term trajectory of the company say that you should be buying, you can do one of two things. You can follow me on X, you can subscribe to me on YouTube, you can like this video, you can share it with another Zeta shareholder. If you want to go further than that, you can come on over to ValueSnapShot. We're building a community here. This is all $7.99 a month. It's less than a quarter a day, and you get all of my framework, the opportunity matrix, how to discover a stock, how to look at the data, how to look at the direction. You can run your own projections. You can look at the financials. You can look at the market briefs, what the markets are doing overall. You get nice visuals to understand and see visually. You can share all this stuff. You can share these charts with your friends, with your buddies. You can share it on X if you're a creator. You can make YouTube videos with this. You can see the technicals and the directions. And again, we have chat. I'm going to be posting stuff in here in the Learn for beginners. We're going to have tons of videos in here. I'm bringing all those over from Discord. We have an inner circle where I'm giving all my investments and portfolios. You can take your investment game during this rough time to a whole nother level if you want, for very, very cheap. So if you want that, you can come on over to ValueSnapShot.io. I'll make sure I'll link that in the bio below. If you want to follow my live portfolio, my public portfolio, not my bigger portfolios or my private buys and sells, but my public portfolio, you can do that on Blossom. I'll also link that in the bio below. It's a completely free app to download. I appreciate you guys, and I hope you have a great and amazing day. Don't let these markets beat you up too much. Have a plan, understand what your stocks are worth, and I'll keep posting my conviction. I'll keep posting my opinions on stocks. I'll keep using ValueSnapShot to deliver all this to you guys. I'll keep posting my charts and trying to give you guys good entries and levels and all this stuff. And again, all you got to do is subscribe, follow for more, and click the notifications bell so you don't miss any posts I post again. So if you want access to all that, you can do so. Drop a comment down below too where you're watching from. I know I have a ton of people from across the world, Europe, Australia, so on and so forth that watch me. I appreciate all of you guys as followers. Let me know down below where you're watching from and if you're buying more Zeta at these levels. Love you all. Stay blessed out there, and I will catch you guys in the next one. Peace.